In this part, I'll be talking about weak highs and weak lows. Those are kinds of opposites of the strong rejections which I covered in the previous part. So let's imagine that this is some price action, price is going sideways, and then, for example, it creates a low, and then let's say it goes upwards again. And in this case, I drawn the low as sort of weak low, all right? This is a weak low. There isn't a strong rejection. If there was a strong rejection, if there was a significant or strong rejection, then it would be like this. All right, but this is a weak low. There isn't immediate rejection of lower prices. This is what makes it weak, that there isn't immediate rejection of lower prices. Weak high would look, for example, like this. All right, this is a weak high. There isn't an aggressive rejection of higher prices. Aggressive rejection of higher prices would look like this. This is aggression, but this is weak high. And weak high or weak low is a sign of weak buyers or weak sellers. So if there is a weak high, then it is a sign of weak sellers who weren't able to aggressively reject higher prices, but they only done it very slowly, very shyly, all right? So this is how weak high and weak low gets formed. And now let me show you how to use it in our trading. So imagine that there's a downtrend, then there's a weak low, and then the price continues some way, it doesn't matter how. And let's now say that you would like to place a long trade, for example, from this area. Let's say that this is a strong support, or you think it is a strong support. So what usually happens is when the price gets back close to the weak low or weak high, it tends to test it. It tends to test it and create a strong low or a strong high. So usually the price goes below the weak low. The price tends to test it and go below it. So this is why you shouldn't place your longs close to the weak low. And the same goes for weak high. So let's say that there is an uptrend followed by weak high. All right, this is the weak high. And when the price makes it close to the weak high again, it tends to test it, to go above the weak high. All right, because there isn't a sign of strong sellers. There isn't a sign of aggressivity. So the price tests it again, it tests above it. So this is why you shouldn't place your shorts close to the weak high. All right, so it's not very clever to place shorts close to the weak high like this. So don't place your longs close to weak low and don't place shorts close to weak high, because the weak lows and weak highs tend to be tested. Another thing how you can use the weak lows and weak highs is that you don't close your trade if a weak high or weak low stands in your way. What that means is, imagine that you are in a long position and then there is a weak high created. This is the weak high, all right? So don't close your position, because the weak high will most likely get tested and the trend will continue at least few pips above the high of the weak high. All right? So if you are trading in a trend, if you are in a long position, don't close your position when there is a weak high, because the price will most likely test it. The same thing goes if you are in a downtrend, you are in a short position, and then there is a weak low, then there is no really a reason to quit your position, because most likely the price will continue downwards to test the weak low. If on the other hand, if I said in the previous video, there was a downtrend and aggressive rejection of lower prices, then this would be a good place to quit the trade, because this is a sign of aggressive buyers who could turn the trend, but this is not a sign of strong buyers. Alright, so this is how you can use the weak highs and weak lows. Let me show you one more example. In this case, you can see that there is a weak high, and you can see that the price rejected lower prices aggressively. This is an aggressive rejection of lower prices. This is a strong low, and the price continues and tests this weak high and shoots past it to create a strong high. Alright, so this is how price usually reacts to those weak highs. So if you, for example, had some trading level in here, if for example you wanted to go short from here, from this level, then it wouldn't really be smart, because price usually tests above weak highs like this one, as you can see in this case. A special case of weak high or weak low is the failed auction. What failed auction means is that two or more candles have their highs or lows at the same price level. You can see it in a picture. Those two candles have their lows exactly at the same price level. And this is the typical case of failed auction. The theory behind the failed auction is that the market is always in an auction. It's an auction that first goes upwards, then it goes downwards and upwards. It's a continuous auction, alright? An auction should always end like this. It's very similar to, for example, when you go to auction house and there is an auction for a painting, alright? So imagine you are in an auction and there are people who place their bids and the highest bidder wins the painting, alright? So let's say that you have 3 bidders who are willing to pay $1,000 for the painting. Then there are 2 bidders willing to pay $1,100 for the painting. And then there is the one who actually wins the painting and he's willing to pay for it $1,200. Alright, this is the winner. The failed auction would be if the auction ended at this place with 2 bidders for $1,100. And this is kind of weird because you always need to have one winner, not 2 winners. Alright, so this is why it is called failed auction, because the auction has failed. So what usually happens is that after some time, the failed auction is transformed to a successful auction. So this is a failed auction. Those 2 candles have lows at the same price level, but after some time, the price will return back to the level and it will test below this level to create a successful auction. The auction could continue, it could continue downwards, or it could test below it and then continue upwards. But if there is only the one winner, if the auction ends like this, then it will be a successful auction. Alright, so this is how the auction theory works. In trading, it basically means that if you see 2 candles ending at the same price level, then you can expect that when the price gets close to the level, the price will most likely test below the level to create a successful auction, to transform the failed auction into a successful auction. So how to use the failed auction in your trading? Let's say that this is some price action. Now let's say that there are 2 candles